Hi, good day, ma'am. My name is Edgar S. T. Harris Jr. Topic number 10, Managing Personal Finances. It will be reported also by Annabelle Carrillo, Rochelle Lacasa, Michael James Montero. So, finances. Managing personal finances, having a clear objectives and knowledge about one's finances. That is an essential part of creating a workable plan that is right for you. Financial management involves creating a budget, choosing bank payments, taxes, managing debts, investing, retirement, or estate planning. When you start managing your finances, you'll have a better perspective of where and how you're spending your money. This can help you to keep within your budget and even increase your savings. With good personal finances management, you'll also learn to control your money so you can achieve your financial goals. There are types of finances. It will be reported by Ms. Annabelle Carrillo.
Hi, good morning everyone. My name is Annabelle Carelio. We discuss about the managing personal finance. Number 1, income. Number 2 is spending. Number 3 is savings. And number 4 is investing. The last one is protection. Income refers to a source of cash inflow that an individual receives and then uses to support themselves and their family. It is the starting point for our financial planning process. There are the common source of income: salaries, bonus, hourly wage, pension, and dividends. This source of income all generate cash that an individual can use to either spend, save, or invest. This sense income can be thought of as the first steps in our personal finance. Number 2 is spending. Spending includes all types of expenses an individual incurs related to buying goods and services or anything that is consumable. All spending falls into two categories. There are cash paid for with cash on hand and credit paid for by borrowing money. The majority of most people income is allocated to spending. There are common sources of spending: rent, mortgage, taxes, foods, entertainment, travel, credit, and card payments. These expenses listed below all reduce the amount of cash an individual has available for savings and investing. If expenses are greater than the income, the individual has a deficit. Managing expenses is just as important as generating income, and typically people have moved controlled over their discretionary expenses than their income. Good spending habits are critical for a good personal finance management. Thank you.
By continuing, let's talk about savings. So, savings refers to the excess cash that is retained for future investing or spending. If there is a surplus between a person earns as income and what they spend, the difference can be directly towards savings or investments. Managing savings is a critical area of personal finances. In managing personal finances, we need to have our savings. Savings is very important because we need save money to use in case of medical needs, daily foods, and especially savings for our future. And these are the common forms of savings. The number 1 is the physical cash, or what we call the cash on hand, and savings bank account. So savings bank account is an interest-bearing deposit account held at a bank or other financial institution. So the checking bank account, a type of a bank account that allows you to easily deposit and withdraw money for your daily transactions. So, money market securities. It is a good place to invest that are needed in a short time period. So most people keep at least some savings to manage their cash flow and the short-term difference between their income and expenses. Having too much savings, however, can actually be viewed as a bad thing since it earns little to no return compared to the investments. The number 4 is investing. So investing relates to the purchase of assets that are expected to generate as a rate of return, with the hope that over time the individual will receive back more money than they originally invested. Investing carries risk, and not all assets actually end up producing a positive rate of return. This is where we see the relationship between the risk and the return. So also investing is one of the factors that we need in managing personal finances. In investing money, we need to invest our money to the corporation so that our money will have an interest and we will grow bigger. And the common forms of investing are the stocks, bonds, mutual funds, real estate, private companies, commodities, and art. So let's talk first the stocks. So what is stocks? Stocks is also known as an equity. It's a security that represents the ownership of a fraction of a corporation. The second one is the bonds. Bonds is a fixed income investment that represents a loan made by an investor to a borrower. Another one example is the mutual funds. Mutual funds is a company that brings together money from many people and invests in assets. Another example is the real estate. So what do you mean by real estate? Real estate includes the property, land, and buildings. And let's talk about another example, the private companies. So private companies is a firm held under private ownership. And another one is the commodities. Commodities is a basic good used in commerce that is interchangeable with other goods of the same type. And the last example, the common forms of investing is the art. So art is a diverse range of human activity. So investing is the most complicated area of personal finance and is one of the areas where people get the most professional advice. There are vast differences in the risk and reward between different investments, and most people seek help with this area of their financial plan.
My report is protection. Personal protection refers to a wide range of products that can be used to guard against an unforeseen and adverse event. Common protection products include life insurance, health insurance, estate planning. What is life insurance? It's a contract between an insurer and a policy owner. Health insurance is a contract that requires an insurer to pay some of all a person's healthcare costs in exchange for premium. Estate planning is making the necessary arrangements so that everything you own or estate will go to the right people when you die. This is another area of personal finance where people typically seek personal advice and which can become quite complicated. There is a whole analysis that needs to be done to properly assess an individual insurance and estate planning needs. The personal financial management comes down to having a solid plan and sticking to it. All of the above areas of personal finance can be wrapped into a budget or a formal financing plan. These plans are commonly prepared by personal bankers and investment advisors who work with their client to understand their needs and goals and develop an appropriate course of action. Generally speaking, the main component of the financial planning process are assessment, goals, plan development, personal finance budget. Example, preparing a budget or a financial plan is critical for giving you the best shot at achieving your personal and family goals. Hope you have learned from our report about managing personal finances. Thank you. That's all for today.